Please read this disclaimer carefully before proceeding further. Hello and welcome traders to this week's edition of analysis of DXY dollar index. My name is Vic. Thanks for joining me in this analysis. Let's look at what has been happening on dollar index. Okay, so we were looking for market to actually start moving to these highs, but obviously did not happen because there was a complex W pattern which formed, and we have been able to take short positions from around here. And if you noticed in past couple of weeks, there has been a lot of overstretching that has been happening. What I mean by that is if I go to USD CAD, which is also part of DXY by the way, for 3 days it kept on falling. Actually for 4 days it kept on falling without taking any break, and it actually broke through the structure as well, which is a bad behavior anyway. In my training session, in my training program, I call this as a bad behavior, because when the market is creating indecisive kind of candles in a series of these sort of candles, when the correction comes towards them, it just goes through them, it doesn't stop. So this is what was happening. Same case here, a lot of indecision, lot of up and down, and so when the correction came, it just went through it. So same thing was happening here. Now the market has recovered a little bit on USD CAD, so similar sort of thing is happening on DXY as well. At the moment, DXY is not completely dependent on USD CAD, but it is actually more dependent on Euro USD and USD CHF. So if I show you USD CHF, it is almost creating the same kind of structure here, and Euro USD is near about same. It's not exactly same, but it is near about same. So USD CHF is the one which is actually driving DXY right now in terms of correlation. Okay, so if we look at just DXY, we know that we are bullish on DXY. It's just that the market always takes its ups and downs and turns, and especially when there has been huge fall, from here it started, took a little gap, took a little break, and then started to fall back again. And after such a long move, market obviously is going to consolidate, and it is going to make sure that it wants to break out from there. This is the breakout, this is the consolidation, and this is the breakout. What we are looking at right now is a retest of that breakout. Okay, so if the market finds bullish momentum, then we know that it wants to come towards 95.5, something around here, where we have this moving average right now. So that's what we're looking for on the bullish side. And then on bearish side of things, we see that the market can come to all the way to 91,800. And in my previous top-down analysis, I mentioned that the market can come down to 89 point something level, near about 90 level as well, DXY. So if you are interested in learning more about how I came to those levels, go and check out my previous week's analysis. There is whole series of DXY analysis now, so if you want even for educational purposes, you can watch all of them in series. There are near about 9 or 10 of them now. So what do we expect? Before we go any further in there, let me actually give you a few pointers here. First of all, let's bring in the original analysis that we had last week. So we were expecting market to continue into this FCP zone, which it did not happen, but there was a possibility that market was going to go upwards. We were looking for bullish opportunity anyway. We were looking for opportunity from this FCP zone to go all the way to this level of 93.35, or start from there to go to 93.35, and there was a possibility that market could come back down into FCP zone. Okay, but none of that actually happened. It went to 93.351, retested that level because that was an important level, and then started to move upwards. So what we see here is this sort of move is happening right now. We have upward move, retest, upward move, sort of retest, and what do you expect? You expect an upward move. So let's see how the market opens up. If the market actually opens up and turns into a bullish candle on Monday, then we are looking for even further move. If I go to the lower time frame, we can see that we have inverse head and shoulders pattern, which is going to which has its neckline around here. So this is the neckline that we are looking at. If that is broken, then it is going to go upwards into near about 94, late 94 areas. So that's what we are looking for. But let's do one thing. Let's clean it up and start afresh. Okay, so let's go to the 12-month time frame just to give you a better idea. This is not going to be complete top-down analysis, but I just want to give you a little bit of idea where DXY is, because there is a lot of news flying around about dollar weakness and all that. But charts never lie, so always look at the chart, see it for yourself, what is happening right now, okay, and what can happen. And that is why it is very, very important to have some kind of training under your belt, because if you do not know what you're looking at, then you will always be dependent on other people's interpretation of the market. Okay, so what we see here is that dollar actually fell pretty hard in 2017 and nobody complained about that. And in that respect, this move is nothing actually, like, it's actually smaller than the previous one. Okay, what I'm expecting market to do, if you just look at these candles, 1, 2 and this candle, I'm expecting market to complete as a bullish candle by the end of this year. So 2020, right now this candle, 2020 candle is actually bearish, but it can very well turn into a bullish candle. It may be like a little doji kind of thing, but it may turn into a bullish candle. And there is a huge possibility that it can go all the way back to here, because you see, when this sort of pattern forms, the market tends to fill the gap, fill the wick and go beyond as well. So it did that, but it fell because of corona and other stuff, which I have explained in my previous analysis. So there is a Fibonacci level actually, by the way, that's why it fell, nothing because of corona or anything like that, because there was no corona in 2017, but it fell because there was Fibonacci level around here. So the market can actually create a bullish candle, and if that happens, that means it will have to go through this level, which is the current opening price. So 96,481, it has to cross through that to turn to a bullish candle, right? Okay, right now where we are is right this. So let's draw the lowest points and these lowest points. So this is 88 level that I was just mentioning about, like, it can go to near about that level if the market starts to fall. But remember, at the start of the analysis few months ago, I mentioned that 91 level was the level where we were looking for a bullish strength, and that's exactly where it started from. So if I go to the monthly time frame, this is the level that we were looking at in July and August, and we knew that market was going to go upwards from here, and that's what's happening right now. And the reason behind that, there are multiple reasons behind that. One is there is a WM pattern here, and that can push the price up. It has been doing that. It's just that it's so far it has been so bearish for a few months that it wants to retest some of the level, and this is what I expected at the start of this month and last week as well. So this has been done now, but because the month is not complete, so it can still come back down and start to do, like, create a bearish candle. So this month we can still expect to have a bearish candle. And if you look at the previous one, this is engulfing candle, which basically means the price wants to go up anyway. And you see that 96,481, that is the level, like, all it has to do is just go over that, and 2020 will finish as a bullish candle. And if that happens, the entire thing will be like, the whole media and everything, the story that they're building, that will just come down, because at that moment in time, dollar won't be bearish anymore. It will be actually bullish. So do not rely on them just as your single source of information. Okay, so these are the levels we are definitely interested in, and then we are interested in this level as well, because it has been acting as support resistance for us to say. You see that here and here, this is a structure level. Okay, so if I go to the weekly time frame now, you see that level of 96,481, that confluences nicely with moving averages right there, and right now we are struggling with this. Okay, and this is a bullish start from here. So what you will notice that the market has actually, like, this level of 94,657 is right there in the middle of the Bollinger Band. Okay, this is the mid of the Bollinger Band right now, and this is where the market can come up to. Okay, so market has started to move upwards, and if it comes there, then, and if it breaks through that, and if it actually performs a retest, then we are looking for 96,481, and that's what I'm expecting. Okay, so I'm bullish on DXY. It's just that I had one evidence here. I'm just about to get another evidence before I start building positions on DXY. Okay, so what can we do? What we can do is we can go to the lower time frames and we wait for a trade setup. Okay, so if I go to the daily time frame, what I can see that market is doing what? It is right now struggling with mid of the Bollinger Band, right? And this is the level which can be reached. Okay, once this has been broken, 94,651 has been broken, then we're looking for 95,138. Okay, and what we should also do is we should draw Fibonacci on this leg to see where we are. Okay, we are currently struggling with 50%. Okay, so we are, if I'm drawing it right, then we are okay, so 50% has not been reached yet, and that is actually a good thing, because if it has come to 38.2, that means it is expected to go to 78.6. so this is all looking very good and very bullish for dollar. It's just that it will take little time. Most of the retail traders, they start to jump high and down, like, they read the blog post and they, like, every 5 minutes they look at a candle, or it's going down or it's going up. It does not matter. All of that is news. Just look at the structure right now. The structure is telling me that 96,481 is actually approachable only if it goes through these levels which are present here. So I'm going to put extra levels here which can be reached. And obviously on the bearish side, because we always look at the bearish side as well, these are the levels that we are looking at, and I'm going to draw Fibonacci on it to see where we could be heading to. So this is a zone of interest, so this is what we call as FCP zone. Okay, and because it's creating something like this, so I'm going to put one here and one here and one here. And now if I remove all of this Fibonacci, if I just remove this Fibonacci and this Fibonacci, and if I go to 12-month time frame, these are the levels that we are looking at. Okay, so if I go to monthly time frame, these are the levels that we are looking at, and you will notice that most of the time Fibonacci automatically lines up with nice structure level. This is a very good demand zone that we have, and obviously there was no previous structure here, but look at this one. This is very good structure level. So it automatically starts to line up most of the time, and that's the beauty of the market. That's the beauty of FCP analysis, Fibonacci confluence pattern analysis, because it confluences automatically with the market structures and important things if you're doing it right. If you're interested in training, then you can find more information about that in the description. And a new tuition group is just about to start, so if you're interested, then get in touch. Now what we have here is we're going to have a W pattern here. Okay, and we also have a possibility of M pattern here. So if the market starts to go down, right, so this is what we're looking at. First of all, we should put a neckline here, because if you remember, we are looking at this neckline. This is the inverse head and shoulders right there. So we are looking at this neckline of 93,894. Okay, and if that is the case, then people who trade head and shoulders, they know what to do. Okay, this will put right into this level which we identified automatically. It comes right into that level. Okay, so this is the inverse head and shoulders which is forming right now. Okay, so all of that is just a little bit of retest which is happening. The retest which actually happened last last week, a little bit like this. That was a reaction to the structure level, and it wanted to come and retest these moving averages. If I go to the daily time frame, it is simply testing the mid of the Bollinger Band right now. Okay, so we need to see how the next day is going to be. If it is bullish and if it breaks through 93,894, then we are looking at this sort of move. Okay, another level to look for is this one. So these are very important levels that also we are going to look at. Okay, so how we are going to trade this? Now what I'm going to do is I'm going to look for a structure break of this 93,894. Okay, if that actually happens, then I'm going to look for a long position into that level. If you have been following my analysis for a while, you know what to look for. We trade from level to level. Okay, once the market has reached there, I'll take partial profits or I'll take full profit, then I will wait for confirmation, and we have 5 confirmation techniques that we use. So if we find a confirmation to go long, then I will continue long in here, and if that is broken, then we're looking for next one, and if that is broken, then we're looking for the next one. So this is how we continue going further, and there can be ups and downs, so the market can keep on coming back to them. So it's quite possible that it can start to come back down from here and then start to move upwards, or it can come down back to this level. So these levels are you can say that these are kind of support and resistance, but they are not. As you can see, I haven't actually drawn all support and resistance. Okay, on the bearish side of things, if the market starts to go down, right, and if it actually breaks through this level approximately, then I'll be looking for a short position, okay, into this FCP zone. And if that is broken, then I'm looking for obviously the next level and the next level and next level. So this is how it is going to be. Do not go by these arrows, as I said, they can be ups and downs, but these levels are very important. So you can have several long and short opportunities available to you if you just follow these arrows. Okay, so that's my analysis and trading plan for DXY. Hope you enjoyed this, hope you found this useful. If you did, do me a favor, hit the like button. In the comment section, let me know what you think about this analysis, what is your opinion on DXY, and do not forget to share this with other traders and other trading communities, because this is how you're going to help me, and this is how you can express your gratitude for this free education and analysis. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. Brochure has a lot more information, including the course structure and the Fibonacci Confluence training program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to vikinsa.com, and under training section you'll be able to see and submit this form.